Hi there, welcome to Traders for Traders. Now, I'm here to introduce the first of a five-part series on how do the bankers trade Forex. Right, this is going to open your eyes to the small part of the market that controls the majority of the volume in the market. Now, once you understand how the bankers do trade Forex, okay, you're going to be a step ahead of the market, and this is the most important thing, you'll be trading with the market, not against it. All right, now what are we talking about with the bankers? Now, I've got a whole range of things here that I want to sort of discuss and go through, but let me just sort of start back from the very beginning. Now, I've read and become quite frustrated, frankly, with the number of people out there who are spruiking, I'll show you how the bankers trade Forex. Now, at best, it's second or third or fourth hand information. Now, the banking community is very small, and I've had a good look around the place, and there's so many people claiming, I'll show you how the bankers trade. And it is extremely frustrating as someone that has come through the banking industry with 20 years of experience. So let me just put my sort of touch on it. And this is first-hand knowledge, not sort of something that I've read, not something that I've heard from someone else tell me or anything else for that matter. All right, so the bankers. Now, what are they doing different to you as a retail trader? Well, there's probably a lot of things. Right? One thing overall, and this is what you'll get out of this five-part series, is the simplicity of their trading systems. Their methodology is extremely simple. Clear technicals, straight up fundamental drivers, and really precise execution. Now, I'll go into detail as we go through this series, but just focusing on the mindset of the banker trader first and foremost. Now, what do they do that's different? Well, let me just come back to where they actually start. And I started as a graduate straight out of university with Citibank in Sydney. And basically, the structure of what you do, the first year or two, you are basically learning. You're learning about the markets. You're learning about the currencies, the time zones, which currencies correlate and why they correlate. And then starting to build some structure around the fundamental drivers in the market. But they spend a lot of time drilling into the young guys, okay, all about the various aspects, the minute details of the currencies. And this is one area, first and foremost, that most retail traders overlook. You know, I've spoken to a lot of people, and over the last 8 years in training thousands of people, I know firsthand what they do. They turn on their screens, they look at the currencies, and they just start trading. Now, that is different to what the bankers would do in the first place. They will spend a lot of time making sure that you know what drives the euro, what the euro crosses are connected to, and which ones move on various announcements and those sorts of things. So it's the minute detail that makes the difference. That's the foundations for your whole knowledge. So make sure when you are starting that you do spend a lot of time, and I was going to say enough time, but a lot of time making sure that you have a very thorough understanding of the currencies, the markets, why the prices move, and how to trade those price movements. And then you'll be prepared for the next step. Now, let's just go back once again to, as you go through the banks, you start as a graduate, you go into a junior trader role, and then if you're actually quite successful in that stage, you go into a senior trader role, and then last but not least, you probably become a chief dealer. All right, so there's a bit of a stepping stone, and there's certain levels of knowledge, experience, and things picked up along the way. Your risk profile, of course, increases through this through that stepping stone, and that's the way you should sort of go about increasing your risk. As you get more experience and more success, that's when you step things up. All right, now let's just come back to the bankers and what's different about the structure of what they do and their daily routine. Right? Not only their mental preparation, I'll come into that later on, but their daily routine is very systematic. Right? Every time you come back to the screens, you need to go through the same systematic process. Now, I know the bankers, you know, for the first year, you're getting used to that routine. You're building the routine, the habits of looking at your charts, looking at the fundamental drivers, just checking what the central banks are up to, making sure that the sentiment, direction, entry levels are all lined up, and then you're trading. But they are, one thing that you'll find is, okay, that the guys, when they go to work each day, they're generally getting in. When I was in London, and probably less so in New York, but more London, you're getting to work around 6 a.m. If anything, you're leaving around 5 or 6 p.m. Right? It's a solid 12-hour trading day, and it is extremely exhausting. And I was in London for 4 years. It was a massive learning curve. I'd say I probably aged about 15 years in those 4 years. The amount of pressure and flow and volume, it was non-stop. Okay, but one thing, what we are generally doing, understand what the bankers do. Now, there's two things they do. They actually transact all the corporates, all the investment banks. They go through the top tier banks and they do all the execution for them, right? And it's a bit of a tedious role for the Forex traders. Okay, this is where they lose most of their money, transacting for basically the bank's client base, which are the massive corporations and investment banks, as I said. So the second tier of what they do is basically what you're doing, strategic trading. Okay, that means you're basically looking at the market and placing positions around opportunities where you see direction and entries and these sorts of things. Okay, nothing to do with bank flows and all these sorts of aspects, which you can come unstuck. Now, when you are looking at the strategic aspect of the bankers, the way they trade, right, they are looking very methodically and very patiently at the market. Now, this is where a lot of the Hollywood sort of dramas, Wall Street, not really the Wolf of Wall Street, that was more about partying, but the other aspects where the traders are in there, they're shouting, all these sorts of things. Now, a lot of that is the futures market. It's different to what the banks are doing. Now, that doesn't mean there's a lot of shouting and screaming in the banks. There is, right? But it's insular. There's no one outside the bank that can come in and watch the team trade. So there's a lot of teamwork going on, but what they do is they sit back, and when there's downtime and there's nothing going on, they sit back and they wait and they wait and they wait for the opportunities. Now, let me just give you some structure around how the bankers trade and where you need to get some skills and knowledge first and foremost. Now, a lot of the confidence that comes, that is sort of perceived by the Forex traders, and they are extremely confident to the point of almost being arrogant. Now, I was always sticking up for my traders when I was the chief dealer, primarily because a lot of people thought they were over arrogant. But if anything, you know what? They were confident, and they had to be. This is a tough industry, and especially when you're on a bit of a losing run, you need to pick yourself up, dust yourself off, ready for another day. And this is one of the first aspects. They're psychological components. They are very hard-headed. Now, one of the first things, the secrets that I was taught, and I taught many of my junior traders along the way as well, every day is a new day, right? That means you reset at the end of each day and the start of the next day. It's a completely new day, regardless of whether you've made 200 grand, 400 grand, or you've lost 100 or 200 grand as well. You can't dwell on yesterday's performance. And this is a very hard thing for a trader. Like sports people have a week in between, games. Traders, it's 5 days on the trot, 2 days off, and 5 days on the trot. It can wear you down. The only way you can psychologically get over the emotional roller coaster is to switch off, okay, when there's nothing going on. But most importantly, reset each day. It's almost like you need to plug yourself into the wall, wipe your memory, and start again. Overconfidence, right, and this usually happens when you are making money, is probably the biggest cause of losses. Generally, when you're in drawdown or you're in a losing sort of phase, and this happens to all traders in banks, retail traders everywhere, investment banks, fund managers, they all go through this. When you're in a losing phase, you're generally really focused. Okay, you are looking probably closer attention to detail than any other time. When you start making money, that's when you start to think, well, it doesn't really matter. You've got more money in your account. It wasn't there yesterday. And then you start making stupid decisions. And that's why you need to reset each day, recalibrate your brain, right? And how do the bankers do this? How's the structure? Let me just explain the structure of the internal mechanics of the bank. So then you'll understand how they do, what tweaks them into action. Right, so how do the managers trust the bankers, trust the Forex traders to manage the risk adequately and professionally and disciplined at all times? Well, first and foremost, they're paid a large salary. That gets you in the door. But it's all about the bonuses. The traders, depending on the level of performance and level of seniority, will have certain levels of certain budgets. Now, my general budget, London, New York, less so in Sydney, was around sort of $5 million. I had to make $5 million each year. Right, and it's like a bit of a tough target, especially when some of the other guys who have been around as long as me have got budgets of 1 million. It's a little bit unfair because if you're successful, they will just keep putting up your budget regardless of how compared to the other team. And that's how they sort of bring it together. So what the traders do is, okay, they're given a budget. Now, let me just sort of take it back to a junior graduate level so it makes a bit more sense to you. So say your budget is $100,000. Now, this is the way the traders prepare themselves mentally. And it's quite systematic. They treat this as a business, as you should as well. So if your budget or your target, your goal for the year, well, let's make it actually 120 grand. Then I can break it down into easy components. So what they'll do is the trader himself will go into each month. Okay, 120 grand, he needs to make 10 grand a month. And then you go into each week, he needs to make 2.5 grand a week. Right? And you can actually sort of see this is actually these are the sort of targets we would actually give graduates, right? Now, we let them trade. We let them sort of lose 100,000. It's not, in the big scheme of things for the banks, it's not much money, but it's a big learning curve. So, but what you need to do is you need to set some goals around what your specific targets are, and then break them down into weekly, monthly, or sort of daily, weekly, monthly, yearly targets. And that way you can manage the opportunities in front of you and make sure that you are ticking the account over. Now, around that budget, now how does management control this? Well, they give the traders specific limits, okay? Position size limits. They'll have drawdown daily limits, drawdown weekly limits, drawdown monthly limits. Now, this is the same structure that we have for our funded trader program. And it's important you understand this. This is the professional network in action. And this is the way that the senior management controls the trading teams to make sure they don't blow the place up. You know, there's so many loose characters like Nick Leeson in the mid to late 90s when I was in London, brought down Barings Bank. You know, it was a derivatives market, but basically that changed the structure of a lot of back-end systems. And going on forward from that, there's been a whole range of guys that have stepped over the mark. And the banking systems are very tight, and you have to control the parameters around the traders on the front end of the desk. So the traders have limits. Now, one of the key components, which is completely different to what retail traders do to bankers, is retail traders, you're trading your own money, right? And that's actually quite tough. You're putting your own cash up, whether it's 10 grand, 20 grand, 50 grand, 100 grand, whatever it is, right? And you're risking that cash. That is fundamentally different to what the bankers do. They trade the bank's money. When we lose with the bank's money, you don't really care too much. So how do they bring some caring into the Forex traders? Well, it's actually quite easy and quite simply done. Now, the bankers, before they become sort of senior traders, have probably been trading for five plus years, if not 10, to get to the top of the tree. Now, the fear of losing, if they actually break limits, right, they're sacked immediately. That's their whole career on the line. They may have spent 10 years trying to get there. You push through limits, you're sacked straight away, right? So how the bankers control it is they give them bonuses. That's the carrot to keep them going. Then they sort of focus them with their limits, okay? And then the whole sort of, you know, where you have the fear of losing your cash, they have the fear of losing their careers, their security and everything else. So the fear factor is quite comparable between the retail trader and the banker itself. So there's some similar comparisons there. Now, so coming back to the structure of what they're doing, the mental preparation each day, the routine, the systematic analysis. This is where it comes back to, once again, as I started at the beginning, with understanding the level, the time and effort they put in to learn in the market. Now, you go back sort of 27 years ago when I first started, there was no online systems. There was no online courses. You had to sit next to a trader and they told you exactly what's going on. What we've done with our course is actually jam that 20 plus years experience into 100 plus videos, and now you can actually get a whole range of that experience. Instead of taking a couple of years to get that in, you can get that done in a matter of a week or two, depending on how much time you've got to go through things. And that's where your confidence and understanding is going to come into play. Once you've got confidence around knowing what you're doing, right, all of a sudden the fear evaporates, okay? You've got your cash ready to go in the market. You've got your understanding of the market. You're looking for precise, low risk, high probability entry levels. When you put a trade on, you are thinking this is going to make money. Now, that all comes from understanding, managing your cash, right, and understanding the market. Now, how can you sort of get some of this control, right? The main part of the control comes back to, as I said, with the limits for the bankers, but for you, it comes back to capital management. The 4 consecutive loss rule that we have, I have constructed some time ago, and it's a major part of the Pro Trader course. If you get that right, you are set to trade and trade forever, right? You will have a long trading career, if not successful, especially when you start to take in the key components of technical analysis and fundamental analysis that you'll learn through these webinars as well as through the Pro Trader course. All right, so confidence, limits, capital management, right? That builds the banker's structure when they get to the office. Now, one of the other key things that you need to do is actually start to sort of work out what you should be looking at and what you don't look at. And this is a major part of the 247 trade zone that we have. And it's trying to sort of give you that experience. Don't waste your time reading what Donald Trump would call fake news. And there's a whole heap of that out there these days. If nothing's happening in the market, you'll find Reuters and Bloomberg, the two prominent financial markets news services, will regurgitate the same news to try and keep people interested. Don't forget, they are selling advertising just like every other company. So understand when the markets are on and understand when they're off. As I said, the major thing I want you to take out of this first step is not only the mental toughness that the traders have each day, the way they conduct their business, the way they execute, but it's also the level of relaxation they have. They have a huge amount of downtime. When nothing's happening, they don't go looking for trouble. They don't sit in front of the screens and just bang away all day long. Right? You'd go crazy if you did that. They wait for the big moves and they hit them hard. So they are very patient. In fact, what they do is most of the time, and this is, I was in the banks for almost 20 years. You're out partying almost 4 days a week. And that's all during the week. The weekends, you're probably sleeping in because you've worked so hard and you've been out all night, every night. And that's what they do. They actually take the time, relax. They go out and have a good time. They come, when they get in front of the screens, though, they switch on and they are extremely focused, right? And that's probably one thing that I see and have heard from a lot of traders out there. What's the difference between me and the other guys? Well, I'll tell you, number one, a lot of people, for instance, they're either working shift work or they've got a day off and they think, it's Wednesday. I've got 6 hours here. I'm just going to turn the screens on and start trading. That is so wrong. Now, sure, occasionally you might find the market moving at that time on the back of some economic data release or some random news. But generally, you trade when the market is on, right? Now, generally, that's when it revolves around the economic data releases. Now, if you are pushing the market and trying to pull money out of it, right, that's when you're going to come unstuck. You can't force the market around. And the bankers even know this, and they are turning over a huge amount of volume. So you wait for the market to deliver the opportunities for you. And this is why they focus very closely on the fundamental aspects of the market. That's where the cash really is, right? If you can work out where the direction's going, well, then that's half the question. So the traders themselves focus a lot, and a lot of their training is around the fundamental aspects of the market. Now, one other key component they do spend a lot of time on is understanding the central banks. One of the key things, and this comes back to the daily routine, once they sort of get into the bank themselves, right? They come in, they turn their screens on, they check their P&L as you should when you upload your MT4 or your trading platform. Make sure your cash is there. If you've made money, acknowledge it. If you've lost money, check it out. Make sure you reset for your new balance. Now, once you've done that, the key part to sort of going on from here is really focusing on the central banks. The central banks control the overall trend, the sentiment, right? The economic data is short-term momentum. Now, if the central bank sentiment is up and the economic data releases that are coming out for that specific currency are up as well, we've got a very good trade. We've got the trend, we've got short-term momentum going the same direction. All we need now is the technical aspects, and that's where the traders will spend a lot of time each morning going through and making a note of those key levels. Once you've got those key levels down pat, you've got the general sentiment, then we're just looking for that last piece, that fundamental aspect to fit in with the trade. Now, a lot of the times, say the sentiment is up, we've got a good entry level on the top side, but the fundamental news comes out weak. Okay, well, that's, you put your pens down, turn your computer off, and you think, well, where should we go for lunch? And that's what the traders do. As I said, they don't go looking for trouble. If there's a trade on, they trade. If there's not, they don't do anything. And that's what you've got to do first and foremost. Don't waste any of your hard-earned cash chasing the market. If there's a trade on, put the order on. If there's no trade on, well, don't put anything on. And don't waste several hours sitting in front of the screens thinking maybe something will happen, because it won't. And if it did happen, it would be completely random, right? And you wouldn't know what to do anyway. So the key aspect for managing the mental preparation of the bankers is they are sort of pretty relaxed every day they go to work. They know what days are going to be busy and what time of those days is going to be particularly busy, and they focus on those times. Outside of that, it's tools down, rest, relax, go out and party. Right, so that's what you need to do with your trading plan, is get hard-headed with your methodology, your mental preparation. Don't let winning trades dominate your your psychological aspect, because you will start to become a different person, and your close friends and partners will tell you you are being a bit of a loser, because all of a sudden you think you're a bit of a rock star. Now, that's a sure way to start losing cash, I can tell you. Now, it's about focus, confidence, understanding the market, limits, okay, having some structure around your capital management, which is extremely important. That is the most important aspect outside of this one, which is the psychological sort of preparation that you need to have to get you in the groove straight away. So there's a lot of aspects. People sort of come to the screens when they first start trading. They think about the technical aspects. I need to look at the charts. They Google the crap out of the charts. And I'll come into sort of technical analysis in the fourth of this series. But, it's overused. People are using technical analysis and throwing indicators all over it for direction, as well as entry levels and all these sorts of things. Basically, they are doing that because they don't understand the market. If you don't understand the market, you're going to have a huge amount of fear in the market. You're going to be lacking a massive amount of confidence, I should say, every time you get a trade. And as soon as you put a trade on, you'll close it out. Once you understand what you're doing and what the market is going to deliver, you've got your capital management. That's when you're ready to really sort of start rocking and get things moving. All right. Now, this series, as I said, will open your eyes to the way the bankers actually prepare themselves. There's a number of tools they use, whether I mentioned there before, Reuters or Bloomberg. Now, we use Reuters. This is your connection to the market. I'm going to go through this very thoroughly so you understand what to look at and what not to look at, right? But understand first and foremost. Now, I was going to do this webinar last of the 5-part series, but I think it's most important that you understand the edge that you need to have to be a successful trader. As I said, most of it comes from confidence, and that comes from knowledge of understanding what you're actually doing. The markets, execution, looking for that direction and sentiment from the central banks. And some of these aspects you can get through the course. Other things you're going to learn as you sort of trade and experience the release of these events themselves, and in particular the central banks. The release of the rate decision, the statement, the press conference, the minutes. There's a whole range of structure here around various economic data releases, and most importantly, the central banks that do control the overall direction of the currencies. If we get nice, clean trends out of the central banks, we make a lot of money, right? And it's important to you to get this right from the very beginning. If there's not a trade on, do not feel pressured to trade. As I said, the bankers relax, they wait. They've got 12 months to make that budget, right? And that's where their bonus comes in. So if they make their budget, so one day out of, say, 200, it's no big deal. 20 days is no big deal, You need to have this same aspect. And if you're sitting at home, and I get this quite a lot of people stop work and they want to become full-time traders. They're looking for that lifestyle change. Well, I can tell you the lifestyle change is trading fits in with what you're doing. You don't sit in front of the screens for 6, 8, 10 hours a day. And I have met loads of people that do that. It is extremely pointless. At the end of the day, you can't see the forest from the trees. Being fresh, being very specific, but being mentally tough and prepared and disciplined to look at the markets, identify an opportunity or not. If there's not, well, have a look through and analyze the market and see when the next potential event might be, when the currencies might move. If it's not for a day or so, we'll come back tomorrow. Don't sit in front of the screens and just hope that something might happen or try and generate cash out of thin air, because that is a sure way to start losing cash. And once you start on the slippery slope, you'll start chasing the market. And that's one thing that the bankers don't do at all. Okay, so one of the key things, I'm just sort of looking across the various aspects here. I've got some sort of key notes here that I want to highlight for you. So I think one of the key things, okay, is just first and foremost, expand your knowledge, right? As I said, the most important thing, and this is why they don't give junior traders or the graduates, you know, they're called graduates because they've just got into the joint, right? They don't know as much as they think they do. As a senior trader, and I was a chief dealer for about 10 years, you're looking at the graduates, I would be thinking, okay, in 2 years' time, they'll be ready to become junior traders. And the junior trader will be a junior trader for probably 2 or 3 years, okay? If he's good enough and actually blows, you know, the budget out of the water, well, then we'll step him up with more cash and he becomes a senior trader. So there's a stepping stone to your whole career. But you won't have a career unless two things. You get the psychological edge and understand what you're doing. You get the capital management structure around your whole trading system. And this is going to control not only your cash, your trade plan, your risk reward ratios, and your trade selection. It all comes back to this major component. You get those two components in place, and now you're ready to start trading and you're ready to start learning. Now, the next video will be on capital management. As I said, we're going to move into the fundamental analysis, you know, the economic data, the central banks, then the technical analysis, and then last of all, in the last of the 5-part series, I'll be bringing it all together and show you how this system works and how the bankers really sort of focus. And this is where you are computing, okay, when you see an opportunity, right, you see, say, a euro data release. All of a sudden, you know the technical levels, you know the central bank sentiment, you hit your trade, the currency's on the way and your cash is making money. If it turns around on you, you're getting out of the trade very quickly, locking in some profits or just taking a small loss. This is about being dynamic and understand that you can learn more all the time. But having the foundations is the key to this, right? And this is why I wanted to present this, this webinar first, is get yourself prepared, right? This isn't just about Googling how does technical analysis work. This is about structure, right? Structure around your preparation, getting your systems up, your trading platform. If you're looking to become professional, I'd get Reuters on as well. Connecting with networks, whether it's Traders for Traders or someone else, right? You need to be speaking to people that have got experience about and understand how the bankers do trade Forex. And this is one of the key things that we do in the 247 trade zone is I'm giving that sort of knowledge and experience firsthand to our clients. And that's the difference between, you know, learning straight away or trying to decipher the market by yourself for 6, 12 months or even 2 years, okay, and probably losing a lot of money during that whole process. So that's pretty much it. I want these webinars to be short and sweet and precise and get you ready for the market and get you ready for your trading career. As I mentioned, the next in the series will be capital management, the most important aspect of your trading system. Now, if you have any questions on this webinar or any of the other parts of this course, jump online there, info@tradersfortraders.com, or jump in the 247 trade zone if you're doing the trial, free trial that is, and you can ask us questions directly. Not only will I be providing answers, we have got a huge amount of professional traders as our sort of client base, and these guys are extremely accurate with everything they do. And if anything, they do trade the market like the bankers, and that's why they're more successful. I hope you can join us for the journey. I look forward to working with you, and we'll see you for the next webinar shortly. Cheerio.